Well, one of the very few positive developments that came from the recent recession is lower inflation. The trend is tied to very low interest rate environment we've seen over the past several years. However, it does appear that both inflation and interest rates have gone as low as they're about to go for this cycle and are now slowly headed up. While it generally is thought that low inflation is a good thing for consumers and the business community, there are limits to those benefits. To explain a bit more on the connection, we turn to our very own Jim Russell, U.S. Bank Wealth Management Senior Equity Strategist. He joins Business Watch producer Kelly Leon in the studio with this morning's U.S. Bank Economic 360. Jim and Kelly.
Thanks, Peg. Hi, Jim.
Kelly, good morning.
Good to have you here as always.
Yes, ma'am.
So, low inflation, good. Low inflation for a long period of time.
Right.
Not so good?
There are shades of gray here, and probably too much of a good thing is probably not a good thing here.
Okay.
So, you know, one of the things that has, as Peg mentioned, in the recession is inflation has really taken a step back, going from 5 to 4 to 3, and currently sits at about 2. It does hurt savers and wage growth. We'll tell you that especially for people on a fixed income, and let's call those people retirees and other folks out there, those types of returns are very low, and those folks perhaps suffer the most. Consumers tend to delay purchases when inflation is a little bit low, and so folks think that they can maybe get goods and services at a lower price if they were just to wait another month or two, and that has a little bit of a self-perpetuating cycle. Japan experienced that type of thing called deflation. Deflation is when inflation goes from a positive number to below zero to a negative number, and that's where the problems start.
Okay, so the Consumer Price Index is the most well-known inflation reading.
Right.
How is that measured?
Yeah, it's really 200 different goods, and it really just measures, frankly, the cost of living adjustments at the household level. So it basically affects everybody out there, me, you, businesses, etc. And you can see that the largest component by far is housing. Now, we talked about housing just last week.
Yeah.
Cincinnati housing prices are trending up quite a bit nationally as well. We've also talked about education recently as also being a little bit on the high side in terms of some of the inflationary trends. So we do think that inflation probably is now seeking probably a low point for this cycle, as Peg mentioned just a minute ago. And we actually think the Fed is rooting for about a 2% type of inflation number, which they call price stability.
So trends,
right.
What should we be concerned about right now?
Yeah, inflation probably is hitting a little bit of a higher tone to it as we move forward. What you can see here for real wages, and again, this impacts everybody, anything above the red line is actually good for consumers. Anything below the red line you can see is actually bad for consumers in terms of wage gains. What this line shows is wages minus inflation. That's called real wages. You can see we're basically about in the middle of a longer-term historical chart. Now, what we'll see in the next chart is maybe some longer-term inflationary trends.
Yeah.
In the blue line, that's called the CPI, or the Consumer Price Index, which we just spoke to, over a longer-term time frame. The more volatile red line includes food and energy. And you can see that food and energy, because they're commodities, really add a degree of volatility to the inflationary trends over time. That's gasoline, it's corn, it's anything at the store, etc. We do think that both housing and food will tend to drift a little lower as we move through 2014. We do not think that we're going to have an inflation problem whatsoever, and in fact we think that, frankly, at U.S. Bank Wealth Management, that inflation will remain pretty low for pretty long.
Okay.
So more to come there.
All right, you make inflation interesting and fun, as you do every topic, Jim.
Thank you, Kelly.
We love you in U.S. Bank. Thank you so much, Jim. Peg back.